The Bank of Canada's made a decision that will be not raising rates. So it's a good news for all homeowners right now and also people looking to get into the market. The Bank of Canada will not be raising rates, but they have left room on the table that if they needed, if inflation does get out of control, they will raise them again. As we discussed in many videos before, the Bank of Canada and the Canadian government main concern is inflation. They don't care about anything like they care about inflation. Inflation will destroy the entire system. It'll destroy our home values, our stock values, anything you can think of. The currency gets out of control, the value of everything goes up, and the currency is worth nothing. So they will fight tooth and nail to reduce inflation. So they decided the rates they've done so far has having the effect they're looking for. The economy is slowing. Jobs are slowing. And the rate of increase in price in housing is slowing, and actually it's coming down. So they're going to monitor it. They're going to see where the economy goes, and if it looks like it's going to continue to reduce inflation, they will not raise rates again. But they also have mentioned that they expect inflation to be down to reach their target of 2% by 2025. That clearly indicates they expect rates to stay higher till that point. And why that's really concerning is a recent Yahoo survey stated that approximately 1/3 of all homeowners are not going to be able to hold their home for longer than 8 to 10 months once they renew into the higher rates. And we're seeing that trend because inventory numbers right now, if you look at the housing market, we have 11,685 freehold homes on the market. That's the highest number we have seen, I would say, in about 5 to 6 years. And in the condominiums, we have 8,915 condominiums for sale right now in the GTA. And again, that's been the highest number we've seen in years and years. So the market is trending. And there's a saying that your trend is your friend. And the reason why that is because a trend indicates to you, gives you a sign of which direction we're headed in. And when the market was headed upwards, the trend was showing us there's low inventory and there's massive demand because of low rates. So the trend is upwards. Now we're seeing the opposite effect. We're seeing there's a huge amount of inventory. The interest rates are very high. The buyers are sitting on the sidelines. So the trend is clearly showing us it's going downwards. Now, do we want it to go up or down? It's not up to us. We just have to report the news and the reality in the marketplace. Now, across Canada, in the 10 largest cities, they're saying that 59% of their household income is going towards their mortgage costs. That's alarming. When you qualify for a mortgage, you have to have your GDS and TDS numbers. GDS has to be below 32%. If you're a really high income earner, they can spread it or stretch it to about 39%. And that's at the high end. We're at 59% of household income going towards your mortgage. The reason why they wanted it at 32% is because they want to leave room for other costs. You know, you may have to repair your home, you have to make loan payments, you might have to, emergency would strike you and you have to come up with some extra cash. They want to leave room for that. But now we're at 59%, you could say at 60%. So there's a lot of trouble in the housing market. So of all these people whose GDS is so high, they're 59%, if they were to own that same home today, if they were to buy it and qualify for a mortgage, they would not qualify. So households are very, very stretched right now and in a tough situation. Now, a recent Yahoo survey says 1/3 of Canadians, once they renew into their higher rates, because we're getting an average of 100,000 homes being renewed across Canada every month. 100,000 every month. So these people, when they renew, when the higher rate hits, on average, I would say about 50% of them can only keep their home from 8 to 10 months from that point because they'll struggle. They'll cut costs in other areas. They'll do whatever they have to do to make it happen. So if people are going to be stretched out that thin, more inventory numbers coming onto the home, buyers are sitting on the sidelines, rates are going to stay high till 2025, and we expect up to 67% of all homeowners will be renewed into higher rates by the end of 2024. If that's the case and the rates are going to stay high till 2025, there's going to be some turmoil in the market by the end of next year. There's going to be, something has to give. Either rates are going to have to give or these prices are going to have to go much lower. I know we have come down in value. I know the home prices have come down from 2022 and 2021 when the prices skyrocketed, but they have to, the signs, the trend is showing us they have to come down more. With 11,685 homes in the market, with 8,915 condominiums on the market, there's plenty of inventory. When you have too much inventory and less demand with high rates, the prices will be forced down. So investors across Canada, we own about 30% of all the properties, including condominiums and houses. And this has gone up by 10% since the beginning of COVID, because a lot of investors moved into the marketplace. The market was skyrocketing. It shocked us all. No one could explain it. The Bank of Canada actually, they did lower rates to help the economy, and that shot real estate prices up even higher, and more investors jumped into the market. Those same investors are the ones in trouble now. They're trying to unload their properties because there's too much cost on their head right now. And when they first bought that property, they never imagined that the rates would be where they are right now, that the Canadian government would raise rates in 1 year to a record number. We've never had that many rate hikes in 1 year before. So everyone was caught off guard. I just recently spoke to a client where we're going to be listing his home. The only reason why he's listing it, he told me, he says, you know, when homeowners, if you told someone you owned a house, you owned 2 houses or 3 houses, people were in awe. They respected you. Like, this guy has a lot of real estate. He's doing really well. Today, if you tell people you own 2 to 3 homes, they are kind of worried about you, because the rates have gone up, the costs are really gone up, but the rental incomes have not gone up that much. So it's hard to carry these prices and these mortgage payments. So the trend is showing us we're headed downwards. Is the sky falling? No. You have to take this information and evaluate your own personal financial circumstances with your family. If you have a rental property and you feel like it's not going to carry itself, or you're having to put money into it every month, according to the trend, and the trend is our friend because it indicates where we're going to go, it's only going to get worse. We're going to see more inventory, higher rates for longer, less demand in the marketplace, and more families finding themselves in trouble every month as 100,000 mortgages get renewed in Canada every single month into the higher rates. At the end of 2024, 67% of people were renewed into higher rates. Someone has to pay for this. Someone has to answer. Something has to give. And I'm going to end with this in a very simple way to explain to you how the market works. I did this in a previous video. If rates are low, home prices are high. If rates are high, home prices will be low. If rates are high, home prices will be low. It's simple as that. If rates go up, it's unaffordable. People will sell their homes. Massive supply will come onto the market, will force prices down. If rates are low, massive demand will come into the marketplace. There'll be a lack of listings because of the demand, and prices will be forced higher and higher. So the trend is your friend. I hope that explains to you clearly what direction we're headed in. It's not doom and gloom. Reach out to us anytime. It's Real Estate with Raza. You can reach me at 416-995-7317. I take anywhere from 5 to 8 calls every week from people asking me questions about their financial situation. And I'm glad to say we'll be able to help out a lot of families. And again, guys, it's Real Estate with Raza. If you have any questions, reach out anytime. Until next time, take care and bye-bye.